Welcome to Tony Byrne's View, with news you can use. As a chartered financial planner and wealth manager, Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
The pension tax-free cash lump sum traps and how to avoid them. When the Chancellor of the Exchequer, Jeremy Hunt, announced the abolition, in inverted commas, of the lifetime allowance in the most recent budget, and other improvements such as the 50% increase in the annual allowance from £40,000 to £60,000 per person, there was a collective cheer of relief from those most affected by the changes. However, on closer examination of the small print, it was clear everything was not as rosy as it was painted in the Chancellor's budget speech. He has since confirmed that the lifetime allowance will not apply for 2023 to 24 tax year. However, the lifetime allowance hasn't really been abolished. It still applies under certain circumstances on the occurrence of one of four so-called benefit crystallisation events, or BCEs for short, when you can still be taxed at your marginal rate of up to 45%, as opposed to the 55% tax rate for benefit crystallisation events. There were 13 BCEs previously, which have been reduced to 4. Nonetheless, they still exist, as does the lifetime allowance, only it is not called that anymore. Semantics, methinks. Another factor to consider is that the lifetime allowance won't actually be abolished until next year's finance bill is enacted as the Finance Act in the 2024 to 2025 tax year. The problem is that the Labour government has already announced their intention to reintroduce the lifetime allowance if they win the next general election, which is highly likely to occur next tax year after the Finance Act becomes law, and Labour is well ahead of the Tories in the polls and odds-on favourites to win the election. It is on this basis that I continue to advise clients on the assumption that the lifetime allowance will not be actually abolished after all. This means that the current tax year offers the best opportunity to potentially avoid it altogether. This will be the subject of my next blog. Crucially, the tax-free cash lump sum has now been frozen at a maximum of 25% of the previous lifetime allowance limit of 25% of £1,073,100, which is £268,275. This concerns me because I wouldn't be at all surprised if this limit is never increased again. There are many tax reliefs and allowances which have been frozen for decades. I suspect this is the latest in a long line of them. It would appear to be the one way of funding the tax lost from the abolition of the lifetime allowance tax charge. Most people just think they're entitled to this tax-free lump sum monetary amount, and that's the end of it. But it isn't quite that simple. Pensions are notoriously complex, and the intricacies of the so-called pension commensurate lump sum, or PCLS, are no exception. What happens is that every time you withdraw tax-free cash from your pension, the amount you withdraw or crystallise, 100%, is computed as a percentage of all of your pensions, and it is that percentage which is deducted from your lifetime allowance rather than the monetary amount as such. What this means is that under certain circumstances you may never actually withdraw the full 25% PCLS based on the most recent lifetime allowance amount. One way in which this can happen is if the lifetime allowance increases over time. As an example, let's assume the lifetime allowance is £1 million and you crystallise £500,000, resulting in a £125,000 tax-free cash lump sum, or PCLS. If the LTA were to increase to, say, £2 million, you would only be able to crystallise £1 million, 50%, and a maximum PCLS of £250,000. Meaning the total PCLS you could take would be £375,000, which is made up of £125,000 plus £250,000, instead of £500,000, which is £2 million times 25%. If you defer taking your full 25% tax-free lump sum and you already have a large pension worth, say, £1 million, and it trebles in value to £3 million, then the maximum PCLS you can take is £268,275, which is the new frozen limit, instead of £750,000, which would be 25% of £3 million. That's a maximum tax-free cash lump sum of just under 9%. Ouch! If you were to decide to focus on withdrawing the PCLS in stages over the first few years of your retirement and take no income, especially if you no longer pay into that pension, then you may find that you never manage to withdraw the maximum tax-free cash lump sum from your pension. Let me explain this with an example. You currently have a pension worth £800,000. You have withdrawn £200,000 in tax-free cash lump sums, or PCLSs, previously. This means you have crystallised £800,000 of benefits from your scheme to achieve PCLSs of £200,000. Your pension has also fallen in value. If you now wish to take a further tax-free cash lump sum, you cannot do so because the maximum amount allowable is £200,000. In other words, £800,000 times 25% equals £200,000, minus the £200,000 withdrawn previously. So the answer is 0. So the balance of the maximum allowable PCLS of £68,275, which is the maximum new frozen limit of £268,275 minus the £200,000 taken, cannot be withdrawn until your pension is worth at least £1,073,100. 25% of this figure is £268,275. There's a lot of number crunching going on in this podcast, but the main takeaway is that you may never manage to withdraw the maximum tax-free cash lump sum from your pension because of the various traps. In order to avoid these traps, you should consult an experienced and knowledgeable independent financial advisor for advice. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.